timely, insightful, discussion and analysis of economic trends and markets. From Southern California to Sacramento, featuring business and political leaders, unique field reports. From Orange County and the campus of Chapman University, this is the Chapman Business Report.
Continuing on to the Southern California economy, Orange County and the other counties in Southern California. Pete Weitzner joined by Esmael Adibi. And let's just, as we do with the national economy, let's talk about the positives. Some are similar, the wealth effect here with home values going up. A lot of investors, of course, done well with the stock market. But also here, more so than the national economy in Orange County, job growth.
Yes, we have, we were so discouraged, economists, when we were looking at the numbers in 08, 09, 10, and we were seeing Orange County underperforming California. And both of us, California, Orange County,
Orange County almost at 10%.
Yeah, underperforming the U.S. Unemployment rate in California way over the U.S. So we got really hit hard during this recession. 2012 marked the beginning, or the first year, that Orange County and California started outpacing in terms of job creation the nation as a whole, and unemployment rate started showing significant drop. And we think that trend is going to continue, mainly again going back to the housing market. That biggest drag that was really forcing, a slowdown in almost every sector of the economy is gone. So we're building more homes. That's a positive news. And then if you look at Orange County together with Bay Area, San Francisco.
Sure.
These two areas are benefiting from a whole bunch of other things, such as professional business services, even improvement, albeit slow, of export market. So, and education and health services, leisure and hospitality, Google and Facebook. So when you put all of this together,
So many of the big techs are still,
exactly.
of course, based
So we
there.
have seen
Apple for a while.
2012 and early this year, 2013 first quarter, our job creation got even stronger than last year as a whole.
You said 32,000 jobs in Orange County.
For this
year, 37,000. So that would get us back, I think, even above.
No.
Well, we lost 120,000.
Yeah,
and I think we're very close.
We're going to be close.
And then on the rate, our best was 3%. We almost hit 10, but now we're at 5.7.
5.7.
So we're better than halfway home.
But remember, we talked about it before, that part of it is labor participation. Right. Even in Orange County.
And we're still losing young people,
yeah,
so that's
we have
a big
seen
problem.
That some discouraged workers are over there. But all around, when you look at the performance of local economy, and particularly if you look at California, the coastal areas, we're doing much better than we did last year, and especially during recession.
So the local negative, the higher taxes. We passed barely, but the voters did pass, in theory temporarily.
Yeah.
Higher income taxes and higher sales tax. That's the big negative.
And together with the payroll tax.
Raising of the payroll tax by
and
a
especially,
third.
When you look at, we just mentioned it in earlier, when you look at the consumer confidence, part of the reason consumer confidence in California is dipped down a little bit, I believe is the people who are very, very exposed to wages and salaries. Remember, if you're making your money from dividend income or rent income,
sure,
or you own a whole bunch of property and they've gone in values, you should feel very good. But if you're just a wage earner and you look at your paycheck, which is got a haircut by 2% Social Security, you didn't get much of a raise, and gas prices running about $4 a gallon. So you see that is a negative.
And wait till you visit your tax man. Maybe.
Exactly.
I know it was on the upper end. But,
yeah, but still, it has negative impact on the economy. So that's a drag for us.
But overall, and here's even the better news, because we knew Orange County had been doing better for some time, is that the state as a whole, led by the coastal, not by inland, and Los Angeles has its problems, but overall, and there's a number of examples. It's not just, so where are people going to work? People are getting these jobs. Well, the leisure and hospitality, the hotel industry is doing very well here in Orange County.
The occupancy
up 5%,
yeah.
The rates are up, office vacancy is down, and I said the office market's not doing, but it's gone from 16% in 2010 down to 11%, and personal income, and that's very important.
Yeah, that's important. First, if you want to just talk about the office, vacancy rate, that is very much tied to job creation. Jobs that are office related career. And we're getting some of that, but businesses are getting so smart now. They don't put people in huge offices. They're shrinking it. And if vacancy rate is over 12% or over 10%, double digit, which you said, what, 11%?
Well, by 2014, your forecast is 11%. Or Voight, I'm sure the Voight forecast.
Yeah, you still don't see as much of a boost there. But personal income is important. Personal income is, if you look at during recession, some of us, if we went through furlough, if you got a raise, it was nothing, 1-2 percentage point. So the raises are kicking back in. Dividend income is helping. Rent income is helping. Remember, when we talk about personal income, it's not just wages and salaries. It's even profit, capital gain, all that kicks in. And growth of average, let's say 5.5%, is more than inflation rate, and that's a real income increase, which is we didn't have for a long time, and definitely is helpful for spending.